So we're live. This is going to be our first chat with Joe. I'm Mike. We're going to talk about some real estate stuff and stuff that we're seeing as a lender. Gosh, we had a great year coming off of a great year last year. Incredible year. And I think we definitely hit our numbers. We had a goal of hitting 40 million. We got close to 50 million in volume. Yeah, big numbers. I really do think it was the grace of God that got us there because now looking at these things and some of the stuff we're going to talk about today, it's just it's hard. This is a hard market. This is also that slow time of year. So, Joe, what's going on, brother?
Hey, what's going on today, Mike? Nothing much on my end, just another day
Yeah,
dealing with February. You know how it is at the beginning of the year.
100%.
Everybody's just trying to, seems like we're still getting out of January. That lasted for what seemed a whole year itself. So,
Yeah. So let's just break into it, man. What are the number one questions you're getting right now? Kind of like, I mean, because you work on my team, right? We both get
correct.
questions. We're talking to people day by day. We're doing what we can to help them. We have a lot of market questions and things like that. What are you hearing right now? What are the things that you're getting more than anything?
So the number one question I always get, and I continue to get right now, where are rates?
Yeah, yeah.
That's the always the main one. People are always curious, want to know
Okay. Yeah, I mean that's
what the
such a
current
great.
rates are. Where can they keep, track of them for their own personal,
Yeah, yeah. It's a
yep.
good question. And rates that we have, quite honestly, I mean, they're all over the place. One day they're really good and then they get really bad again. And it seems like, that's kind of a loose, even term, but I think we've become so accustomed to rates in the 3-4% range for the last decade or so, even under three during 20 and 21, that, it's really kind of that's where a lot of folks think rates should be. However, if we look at like a 40 year analysis of where rates have been traditionally, it's usually between 6 and 7%. So people just are not really used to it. But as we found out last year, a lot of people adjusted to that fact. There's ways around, getting that first year or so lower, of course, with a temporary buy down product, where the first year is lower than what the graduated rate would be of the product, with the hope that eventually rates will get lower. And really, kind of some of the key points that we've had, in the last year or so, just to answer, is of course stocks are higher. As we started today, mortgage bonds are a little bit lower. We see basically, treasury issuance right now is being focused on short-term securities, which is keeping long-term rates relatively stable. The reason why treasuries matter is we have mortgage-backed securities, actually a bond. And as we look at bonds, that bond is, of course, more of a long-term security, right? And really what we're looking at is inflationary figures, and we look at what's taking place with things with our economy, and that's why a lot of heads or eyes, should I say, are focused on tomorrow's jobs report. The jobs report comes um, in an area that would be favorable. That means that technically we have something called a 100-day moving average. What that average is okay, where rates have been as far as resistance go within the last 100 days. And so right now, mortgage bonds are up against that. Also, the 10-year treasury broke through a critical level. So if the jobs report comes out in a way that would actually help with our economy, and essentially, saying, hey, if the jobs report comes out less favorable, I know it's not the best thing in the world to say, of course. We don't want to see people lose their jobs. However, if we do get a poor jobs reading, it's more likely we'll see interest rates resolve as well, and continue to improve. Long way to say all the technical aspect, and I know it might sound like jargon, but long story short, if I had to summary what we're seeing in interest rates right now, it goes back to the basic fundamental of our economy and inflation and what's going on with those items. Now, just yesterday, of course, we were kind of responding, or the markets were responding, should I say, on what a Fed chair had mentioned and a new Treasury Secretary had mentioned through the weekend, and we're starting to see improvements as a result in interest rates, which means interest rates that were around 7 to 7.5 for a 30-year fixed, as an average, came back down to about 6.9%. And as a result, we start seeing, these levels get broken yesterday and today with what we call moving average, which is kind of a threshold of where things should be. And of course, as a result, interest rates are now improving. If they were to improve further, we're hopeful for that. But that's kind of the technical analysis. And the reason why I say that first before where rates are today as we record this, they could change later today. there's something in our, you know, economic news that could come out that could shift where rates are today and where they're going, meaning they could go higher or lower. We're hoping lower, but then again, we hoped lower in September. Then you got a really harsh, I would say, for the market's jobs report, good for jobs numbers, but the jobs report that came in October caused interest rates that were incredibly low, and a 10-year treasury that was around 3.6 to catapult nearly 100 basis points. So that treasury that was around 3.6 crossed 4, was headed to about 4.5. Last month, we're even getting closer to a 5% 10-year treasury. And the reason why I mention that is it is a lot of volatile swings as we come out of what we did with, inflation concerns last year. Now, as we look into this year, yeah, I mean, what I tell most folks is interest rates are as low as 6.5. They could go up to about 7, 7.25, depending on that day. So the hope is let's get somebody started. Let's get them pre-approved. And then that way we could look at locking that transaction when that time comes. So I guess the biggest thing to share with folks out there, if you're curious about where interest rates are, is that's the range, 6.5 to maybe 7, 7.25, with hope that will improve. And hoping it wasn't too much technical analysis in sharing all that. But Joe, did that kind of answer the question? Do you think that would help in answering that?
If you're able to keep up, I think, yeah, all great information there. But yeah, at the end of the day, if you're ever curious, always consult, your loan officer where rates are. Like you mentioned, they vary from day to day. So yeah, it's always nice just to have an idea.
Yeah.
But that also kind of ties into the next question I often get is, just because rates are for the time a little higher than what we've become accustomed to over the last couple of years, should I wait for rates to come down ultimately? If I want to finally get into a home, or should I go ahead and take on the higher rate and then wait a couple of years till they come down and refinance?
Yeah.
Perhaps maybe that'd be a good talking point as well.
Yeah, it's a great point. I'd focus on that and just saying, yeah, I mean, best time to buy a house is honestly, a lot of agents say 5 years ago. I'm like, yeah, sure. That's a fun joke,
If
right?
only
Yeah, I mean,
I would have started investing when I was 18, right?
yeah, I mean, yeah, I mean, there's memes out there that joke about this, right, dude? Yeah, sorry, I wasn't buying houses in 2010 when I was still,
Yeah.
right, still in my mom's stomach. But it's funny because I wish I bought more properties in 2010. I bought one in 2009, and then I didn't buy another until 2013. And now, candidly, I mean, to be transparent, I own 9 properties. Um, but the best time to buy a house is when you're ready. Joe, you bought your property, I know, a couple years ago, and interest rates were high. I think it was the highest
Yeah.
I've seen in the last couple years. And you successfully refinanced and got a lower rate, limiting, I think, your mortgage insurance, putting yourself in a better situation. Um,
Precisely.
Joe, we closed over 100 transactions last year, and just about that the year before. So a lot of folks are still buying, and a lot of folks are still out there purchasing a home regardless. And I wouldn't say that to say keep up with the Joneses, but the idea here is don't let the higher rates scare you off. A lot of people aren't. And if interest rates are 7%, 7.5, and we've seen some in that range for sure. We've also seen rates come down in September where it was 5.5, 6%, and being able to take advantage of a lot of people's refinance to lower their payments in that time. Yeah, it was for like a week, but still, I mean, we have programs set up, right? Our straight rate program's a perfect example. We're able to take advantage of them and get that lower rate. So the idea here is I'm not a fan of marry the house, date the rate. I feel like that's kind of just gimmicky and sounds weird, because you don't know how long the rates will be where they are. But the idea is look at the property when you're ready. Are you able to make the payment? Does it fit your budget? Does it fit your financial lifestyle? Does it fit what you are looking to do as an individual, or if you have a family, for long-term plans? And if it does, and you feel like it would be a good financial decision to make, then absolutely buying a property right now makes perfect sense. I do think if you're to wait, home prices will go up. And I was actually talking to the mayor of my town this morning about this. And the reason why is there's this simple statistic that goes back to the last 50 years. And every decade, they built X number of properties. Well, after the financial recession in 2008, they didn't build as many properties. The problem is we have a growing population. And with a growing population, you have essentially 15 million housing starts every single year. That means new homes or new families parted looking for homes. Problem is we only have 11 million homes available to meet that demand of 15 million. So you already have a delta of 4 million. As you have that delta of 4 million, What's that do? Simple economics. Home prices will go up regardless of what interest rates do. Now, take that 7% interest rate, and everybody's waiting for 6 or 5.5. And it's almost like playing red light, green light. But if rates go back to 6 or 5.5%, you're competing with 30 other people to do it. And you're going to spend $100,000 in some cases more on that same property that you would be able to buy right now. If you had done that, you shoot yourself in the foot because, yeah, you could have actually purchased property if you're ready to do so, ready, willing, and able to do so. It's probably the Department of Real Estate's actual technical term in California. But purchase it now, knowing you'll be able to refinance it when things improve and interest rates come down a little bit.
Yeah.
So that's my point. So every situation is different. And Joe, we've had clients that waited 5 years to buy a property. We have some clients that waited 6 months, now they're back. I had a client that just turned around and I was working with him back in 2017. He's now married and looking to purchase a property. So, I mean, situations can change, obviously, right? So the best time to do is when you're ready. And, having, whether it be us here in California or another, loan provider, just making sure that they're there with your best interest in turn, able to go over a full wealth and cost analysis with you so you can see the long-term rate of return and the long-term investment strategy that would provide. Um, yeah. And then of course you do run into those that quite honestly, every now and again, have to get their things in order prior to making that purchase. Joe, we've had 3 in the last week or so where, an individual was going through separation with their wife. They were unable to close the transaction,
Hmm.
right? Because of that. There's another transaction where gift funds were not readily available as they once thought it would when they entered that transaction. It wasn't fully vetted by the donor, and the donor changed essentially their mind. I mean, these things can happen, in that process of looking to purchase a property. And that's why when you're ready to take that step, of course, have a team that's available to help you get there. I would think. Joe, what are your thoughts on that, man? I mean, you bought a property. Let's ask you that. I mean, how do
Yeah.
you feel about buying that home? What was that experience like for you? Do you feel like it was the right time? Or are you guys stoked with what you guys did as far as making that decision?
Oh yeah, no, absolutely. It was a little bit of a long process. We had to find the right place, and obviously rates were a little higher than we would have liked them to be, but just kept telling myself I'd rather find a place for my family to feel comfortable and to stay for, however long we need. My daughter's school is right down the street, have a nice community, and we can ultimately just be here for however long we see fit.
Yeah, yeah. You
And
guys got
then
a killer property too.
yeah, we're right in a great area. And yeah, just yesterday I actually signed my documents for my refinance. So
Nice, man.
a little over 2 years later, but
Yeah,
the payment's going down, got rid of the MI.
yeah,
So yeah, it's just one of those things where, it was a little bit of a higher payment than what I wanted, but it wasn't out of my comfort zone ultimately. And that's the biggest thing. I think
yeah,
a lot of clients could also, keep in mind when you're taking that into account, is just keep it where you're comfortable.
yeah.
You know what I mean? Don't
100%.
don't get yourself into something where you're kind of pushing the limit with the expectation that rates are going to go down because we don't have a crystal ball. We intend, we expect them to go down, but we don't know when.
Yeah.
And you don't want to be stuck in a situation where, you're having trouble at the end of the day making your payments. So, but yeah, overall, it was a great decision. If I had to do it again, I would.
Yeah.
And yeah, so
Nice, man. Yeah, and the biggest thing is budget, right? Like I think
of
anybody should
course.
work up a budget and go over financial analysis. If you don't have a budget, shoot us a link or shoot us an email. We have a free budget booklet for anybody. A book I really recommend to anybody is, several of the books by Dave Ramsey, but The Total Money Makeover, I think is one of the greatest books out there for just managing things in a healthy way. And I think, with inflation, the concern of groceries and egg prices, dude. Egg prices. I mean, I saw a meme today. It was like, you want to have an expensive date. I think Dave Ramsey, let's see if I can pull that up, actually posted it. It's funny because it's like, they're out there and it's so funny. Like they're out like a grocery store in the egg aisle and it was like an expensive dinner, right? Let me see if I can pull this bad boy up.
Not false though. I just paid a 650 for a carton of eggs this morning.
A
If you
dozen?
want a little for a dozen, yeah. Grade A jumbo. If you want a little hack, I do recommend, well, they're a little expensive. You could also look into egg whites, a little bit more of a cost-friendly alternative and health alternative too.
Yeah, 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 yeah.
Health friendly.
100%, dude. 100%. All right. Yeah. Let me do this. I'm gonna just pull it up real quick. You guys can take a look at this 1 second. This is pretty funny. I like this one a lot. I think it's dope. um, all right. Look at that. Take me somewhere expensive. Whining and dining in the egg aisle. right? And inflationary concerns, it's like learning the budget. But you're right, man. I mean, I thought about getting, candidly, I thought about getting um, like a little chicken coop, but we have coyotes that are in our neighborhood, and so
Oh,
yeah,
yeah. It's a lot of work. I know people who do it and it's a lot of work.
yeah.
But
I mean,
it's my
it's like Petaluma
grandparents.
and me, maybe, right? Petaluma is known as the
Yeah.
chicken and egg capital of the world. So, and then, with the 1 year old, the 2 year old, and then, of course, our little Frenchie, I'm like, oh, man, I don't know. Like, I feel like, the coyote would just be like, oh, everything's dinner, you know?
Perhaps when the girls get a little older, you have a couple farm hands to help you out. So,
Yeah, exactly, dude. I do want to bring up something else that we saw, and this is an interesting thing, and I know we wanted to talk a little about this, but this is a crazy statistic. And this is posted by Inman. Inman is, of course, a news publication that a lot of realtors and real estate professionals follow. Inman News. Realtor.com, I feel like posted this just the other day as well. And I think it was even on one of the legacy media channels. I just forget which one. But only 29%
wow.
of agents are doing deals. And this is kind of an instructional thing on how to be one of them. And maybe check this article out. We do have business planning booklets for agents in the industry for interest in that. I did do several business planning webinars already earlier this year. I'm happy to do more. If you want to catch one of those recordings, I could certainly send that out. It goes back to core values, but it's crazy to think that, in this country, if we have 71% of licensed agents that are still licensed and active that have not closed a transaction last year. That's just an incredible number. And I know people, quite honestly, that were doing, 20 to 30 sides, and they are haven't closed anything, or maybe one or two transactions last year. The statistic is incredible. And this time of year is slow. And we know, I always said, 20 years of doing this, you tend to not want to move from Christmas to like after the Super Bowl, because no one wants to move a Christmas tree, right?
Of
And then
course.
they have Christmas, the hangover. You're looking at your bills, you're like, oh crud. Um, so I think it's interesting to see that this time of year, the slowness. But I mean, we're still seeing action, I think, a little bit, Joe. Wouldn't you agree? I mean, what are your thoughts on that article and some of the agents I know you deal firsthand with me as well?
Yeah. No, that kind of blew my mind, to be honest. It just really shows you that it almost makes you wonder, like, are people getting into the real estate industry and then kind of like a couple of years back when we had, a lot of people refinancing and you had a
Yeah,
lot of people getting into lending, is the similar thing with real estate? I don't think honestly that the market's that slow. You had
yeah,
mentioned earlier that, we're kind of outpacing ourselves with demand versus what's available for supply.
yeah,
But from what you and I see, just from a, firsthand experience, there's a good, healthy population that want to buy a home, you
yeah,
know?
yeah. I mean, there's still the demand for housing. There's all the benefits. I mean, a lot of real estate agents understand this as well. And that's kind of one of the sell points is you buy a property, you create financial freedom, you create equity, you have I'm not a tax advisor, but you do have the tax benefit, mortgage interest and property taxes, right? Talk to your CPA. But I mean, there's all these benefits. Then some people are just tired of the landlord. I mean, I've had a couple of crummy landlords in my day. I think we all have.
Oh yeah.
You're in the hood. You're like, I don't want to be in the hood anymore. I want to move to, we're like Joe, you buy a farm. But,
Yeah.
but,
And then speaking of crummy landlords, now you get to be one, right? now. I'm just kidding,
yeah,
but
no,
you're great.
I have a
Um,
property manager guy that handles my properties.
that's a smart way to do it, honestly. But
I gotta say, what up to Julius in Cleveland?
if he's watching. But yeah, no, it definitely just kind of puts into perspective for you that there's probably, a lot of the realtors that are bringing in a lot of the business from like maybe it's people that have been in the industry for quite a long time or, you know, whatever it may be. But yeah, that was definitely interesting to me.
Yeah, for sure, man. I mean, yeah, it's just crazy to think about that. That's kind of where our market is now, and we're also coming off of, I think, now truly from where we were during COVID, and
Yes.
everybody's just
Hmm.
creating a TikTok video, and you get 50 leads from some TikTok video.
Hmm.
TikTok, by the way, who knows? But you see that kind of exit, right? And now it's just like it's such a different market. People are back, in my opinion, as someone who's a professional in this industry, making dials, following up with your sphere, calling your past clients, just being a friend, and just continue to nurture those relationships. And I think that's what really comes down to for what we do in our industry is just making dials. I've always been a dialer. People think I'm crazy for doing it, but after 20 years, I still make 50 to $100 a day just to follow
Yeah.
up and check in and see how things are going. At the end of the day, it's, to stay top of mind, but also to encourage relationships. Grab a coffee with someone, do a Zoom call. These things are helpful. And I think those are the number one ways to do it. It's not necessarily, our devices. And trust me, I mean, I'm on my cell phone too, and we have quite a few followers on Instagram and other social media things, but it's like, gosh, it's not gonna be there forever. It could go in the way of TikTok. Who knows what could happen in the future, right? It's really boots on the ground type of, I think, strategies that help more than anything. But yeah, man, I guess the craziest thing that we saw last year in our lending, I always want to
Well,
ask this question. So let's go through at least one, and we're gonna do these on these podcasts. And by the way, this is our first one, so we're just kind of shooting from the hip to create this. To forgive this, and if there's anything, Mike, you guys should talk about this. Let me know. But Joe, I got to ask you, bro. Like, what do you think is something that like oh, that was like the oh crap moment? And we've had a few. We worked
I
through
was
a
gonna
lot
say
of
there
difficulties.
was a
Like
few.
we have
I
some
think
Doug Flutie Hail Marys in there, right?
yes.
Like
So we're going for one that turned out positive in the end, then, or just in general one that was
let's do one positive, one negative. Like one thing, like client, don't do this. One thing, client did this, but we figured it out. Do that.
Mm, okay. And this one, I mean, this could probably just be a general example that we do get a lot. So
Yeah.
for anybody, it's a common way to help fund your first home transaction is if you have family or sometimes friends in specific situations that can help out with gift funds, such as for your down payment or closing costs. And I can't tell you how many times last year where, we try to strategize with how to effectively do it so that way it's less documentation for the person that's giving those funds, and it just makes a seamless transaction for everybody. Just keep in mind with a gift, there's a few requirements. You typically need a gift letter that's executed by all parties.
Family
And
member.
then if it's a family member, yep. And then also it's recommended that they wire those funds directly to the escrow company. In that situation, all you need is just the gift letter that's been executed, signed, and dated by all parties. And then that's it in terms of the documentation required from the donor and the borrower. Now, we had several situations where, and I understand it too. Sometimes it's just what donors are comfortable with, where they send the funds to the buyer's account. And that's where you really get into some sticky situations. I can't, some of the sources where the funds have come from,
Yeah.
you know what I mean? Kind of, make you laugh almost, where we've had everything come from money under the, cash under the sofa, which it becomes hard to source and, everything like that. We've had people who have taken out loans to, under the guise of a gift. Um, and for the most part, we've been able to kind of work around all of it. There's
Yeah.
always a way. And, even if you get into that situation, just be transparent with your loan officer. More often than not, it's better just to be upfront about it. And then there's always, I would say 9 times out of 10, there's a way to reroute that ultimately to where you can figure that out. So I don't really have a specific transaction just because it happens so frequently. But I want to say, 2 out of 3 we were able to resolve, and get everybody to the closing table when if there was a mishap with the gift funds.
Yeah. It's funny, man. I mean, gift funds is a big one for sure. I mean, I would have to go back to, gosh, one where we're doing a down payment assistance transaction and the client didn't really have like all his ducks in a row as far as employment goes because he had 2 jobs, but like they didn't hire him yet. But he said he did, so we used him for the application. We vetted, we got the confirmation of employment, and we got everything we usually do because in our field, if you worked in the field for at least 2 years or had studied and received your education and have transcripts to show for that employment history, it works if you have a job. And so his debt income ratio, which is the amount of money going in versus what you're spending out, he turns around and is like, well, I got this job and now I'm making 30,000 a month. I'm like, no, you're not. We went back and forth, back and forth, back and forth. Even through the end of the thing, it was just like kind of it was hard. I'll just say that. And it's like, can you get me a pay stub? No. Why? Because it could be available on the 30th of July. And then, okay, cool. Well, on the 30th of July, can you get it? No. Why? Because actually now we're getting on the 10th of August. I'm like, well, when are you getting the pay stub on the 15th of August? I'm like,
Yeah,
it's like, I don't know if you remember that one. I'm like,
I
wow.
think I know which one you're referring to. Yeah, it was like that carrot at the end of the stick. We were
Yeah, and
constantly
it's just
just
like we're trying to help you. Now we're getting yelled at, but you can't just tell us these things. We're going to enter an escrow. We're known for our short
Mhm.
closes. We vet our clients in most cases, and we knew it was one of those once in a lifetime opportunities for this particular client, and we don't want to miss that opportunity with them. So of course, we just put our clients' needs above all else. But we had an agreement to get this by X date, and then on top of it, there's also is I think on that one a lot of funds being moved around too.
Yes,
So
the other thing too is just
yeah, yeah,
just keep your funds, especially when you're getting into escrow, just keep everything in one account if you can.
yeah,
Don't
and
open a new account for the sake of for that transaction. Do that after the fact
yeah.
to help manage your money. But yeah, that's where things get kind of get interesting, get a little sticky sometimes.
And then if you're going to tell us that, or and your loan officer, not just us, if you're working with us, great, and we do love and adore you. But if you're buying the property next door to your house, and you already have this house that's in a great area, and you're buying the house next door for your parents, don't tell us it's going to be for you. Like that's a big thing, and I want to get into that just briefly, if I may. Running over, I think our allocated time for the cast here, but just to share with anybody, if you're looking to purchase a property, I would recommend purchasing a property and being realistic with the occupancy, because the bigger concern here is it ends up being a huge crime. Believe it or not, the FBI investigates occupancy fraud. Freddie Mac, especially FHA, HUD, they're gonna they're gonna investigate. So if you're not gonna live in a property and call it your primary home, then do that. And this transaction, of course, we were able to unveil and get into a non-owner occupied property as it should have
Yeah,
been. It was just an interesting situation, but
a
yeah,
little bit of a curveball, but
yeah, man. Anything else? Let's do a good win that we had.
that wasn't pretty much as good of a win I think we had, with all the circumstances there.
Yeah.
So
So it was
okay.
okay. Yeah,
So
yeah.
this one's a little bit out on the, further end. We had a client who was had a bunch of large deposits to their account, and upon speaking with them, found out that they were funds from a family member. So as we began collecting information and it was advised that it was from his grandmother. So after we tried to begin collecting documentation from the grandmother, get them to sign a gift letter, it was unveiled to us that the grandmother had passed. And so at that point, we tried to figure out, okay, if the grandmother had passed, how did we get these funds? Come to find out that they weren't necessarily a joint account holder, but had the information to the grandmother's account ultimately and were able to send themselves funds. Big no-no, obviously, you know what I mean? So we were able to basically shut that piece of it down. And, we were able to, in speaking with them, and luckily they had a supportive family, so they had someone else through a legitimate means that was able to assist them basically with getting the funds that they needed to help close their transaction. And we did end up closing that one. I remember it was probably a good what, like 2 weeks after the original scheduled escrow, just because of this hiccup that we had. And
Wasn't it a 12-day closing?
what's that?
Wasn't it a 12-day
It
closing?
was not a 12. It was not one of our
Oh,
infamous 12 to 15 days. It was quite a while. It was one of those ones where you're like, that one's still around. All right, we got to get that one done. So, yeah, that was a little bit of a crazy one, but it did get done.
yeah, yeah,
It was just, yeah, just goes to show, just all your funds are vetted at the end of the day. So,
yeah,
uh, every single dollar is confirmed by underwriting. So just keep that in mind. That's all.
yeah.
Nothing to be, afraid of or ashamed about, but
And it's FinCEN SARS as part of the Patriot Act as well. It's just making sure you're not, and I tell it to most folks, it's like you're not laundering money. And it's just, everybody's like that. Doesn't matter who you are. I mean, we've had,
yes.
multi-million-dollar transactions with this. We've seen, CEOs, CFOs, and, down to folks that work in the medical field, down to an auto mechanic, right? I mean, it doesn't matter what you do. It's just what's required. And the reason why, and a lot of folks understand this, and loan officers, if you share this with your clients, I'd recommend it. But it's simply to just show that you're not Tony Montana, right? And
Hmm,
every file could be audited. It
precisely.
doesn't matter. It could be Joe's loan. It could be my loan. It could be our client that closed last week. It could be any single individual could have an audited file. And if that's audited, you didn't properly take those steps, that could be a concern for compliance of actually whether you're your own broker shop, whether you're a bigger mortgage bank. These are all things that could come up post closing when the file gets audited, if it as it goes into loan servicing, which is where the client essentially would pay those mortgage payments. So it's so important to maintain transparency. Work with a team that truly will continue to bless your efforts and just be transparent. So going into the weekend, let's wrap this up. Who do you want to win this Super Bowl, bro?
I'm just excited to watch the halftime show. I'll just say that. That's about it. No,
Kendrick Lamar, man, I'm stoked on that. I didn't even really know
yeah,
who he was because I'm so old school. I listened to hip hop from the '90s and like how I grew up in that era,
yeah,
'90s. So, but I listened to it, I was like, man, it kind of reminds me of how it was back then. I
yeah.
love his music. So I actually, it's funny, the first time ever, I think I'm more excited to see the halftime show than actually watch the game.
And I love. I'm a big football fan.
Yeah,
You and I both, and I love
yeah.
the Super Bowl. But yeah, it's just one of those things where my brother's a Philadelphia fan. The Chiefs are the Chiefs, or the Patriots are the
Well, the
20
Chiefs are
the
the referees, bro.
2020s. Well, yeah, sorry, the Eagles versus the referee. No, but yeah, I mean, at the end of the day, I mean, I just hope for a good Super Bowl. That's all. If they could give us a Super Bowl like they did a couple of years ago, and it doesn't come down to a pass interference call with 2 minutes left in the game, I'll be happy. That's all.
Yeah, I mean, better be able to sack Mahomes without getting a 15-yard roughing the passer penalty
Just
for
don't touch them. I mean, as long as you don't touch them, you're good.
so weird. I mean, Taylor Swift has some deep pockets. It's obvious he's the one throwing that money at this. I mean,
Yeah,
it's
we won't get into Taylorgate today, but that we'll save that for the next episode. But yeah, so let's just hope for a good game.
100%, man. I mean, I thought about boycotting it because I mean, I know your team. We took your running back, big 49er guy. It's hard to watch the Chiefs. I mean, Debo Samuel's wearing a Eagles jersey already, and
He's
I've never
looking
been an Eagle guy. I personally don't like the Eagles. I like
same here.
their coach Dick Vermeil from way back in the day, and then he was the coach for the St. Louis Rams when they had Marshall Faulk and they had that team with Kurt Warner. I love that, like just the history of the Eagles. Sure, I get, but Eagles fans are difficult. They're like Raider fans. And not to hate on you guys who are Eagles fans. Please don't send us hate mail. But it's just funny. I can't believe it. But one of our best agents in Southern California, Richard, he's a huge Eagles fan. And I was texting him I remember I was actually texting him during the divisional game. And we are just going back and forth throughout the entire game. And same thing with, as they got onto the Super Bowl last week or 2 weeks ago. And I'm like, dude, I'm 100%. I got to say it because I can't stand KC. Josh Allen got that first down. Referees obviously called
Mm,
something. I'm 100% Eagles if I
yeah,
pick a team, but I really don't. I'm still upset that the season
got no
ended.
skin in the game. I
Yeah.
hear you. Well, if I had to, I guess I'll say go Birds. Only
Yeah, I
time I'll
mean,
ever
I
utter
can't believe I'm
that.
saying that, dude. I mean,
Yeah,
I don't know. Share a moment with your brother, dude.
he's had enough. You know what I mean? He had one a couple of years ago. So
Yeah,
there's some of us who would just like to in our fan bases, we would just like to win. So
yeah.
anytime I don't really feel for people that are, oh man, we lost the Super Bowl. No, I'm just
We
kidding.
could
But
always get it. We could always get tickets to one of your games for a fairly inexpensive price, though,
that is true.
right?
I think
So like, it's like twenty
tickets to
dollars
our
to go to a game.
tickets to I'm a Carolina Panthers fan. It was viral. What was it last year when we were 2-14
Yeah,
or 2-15? We had tickets selling for about like $1 or $5
I saw it.
at one of our games. And yeah, when you looked in the stands, there was nobody there.
You know, in 2000, I remember that in 2003, they're the Raiders coming off of that Super Bowl, um,
Hmm.
and they were falling apart. That was like it was when they lost Gruden, and then back then they still had Rich Gannon. They had Tim Brown
Tim
still.
Brown,
Rice was
touchdown Tim
there.
Brown.
Warren Sapp started to play their O line because I picked him up from the Bucks. But they played a game against Green Bay. It was the night that Brett Favre's dad died, and is in Oakland. And so I remember I was flying home because my grandfather was ill, and the plane was packed with Raiders fans from San Diego. And
Mhm.
it was so funny. I was like, "What's going on?" They're like, "Oh, they're trying to fill it up for Monday Night Football. They're selling tickets for $20 a ticket, no matter where you were."
Wow.
I'm like,
Imagine
"Wow!"
that.
And that was, if you look at the stats of that game, if you want to look it up, that was Brett Favre's best game, like ever, as far as his stats go. But he's playing
That's saying something.
he's playing a hurt Raiders team that literally didn't have Gruden at the helm anymore because Gruden
Yeah.
built that team. They played them, Gruden's new team, the Bucks, in the Super Bowl. So
Yeah.
Gruden's looking at his old playbook,
Yeah,
and the guy
right?
that came in to replace him was a nobody. I
Yeah, I couldn't
forgot
even
the
tell you.
guy's.
I couldn't even tell you who it was, to be honest.
No, I'd have to look it up, dude. That was a joke. I was like Safula with the 49ers, right? That was after the Harbaugh era. That was like that dude. Or as much as a lot of us love Mike Singletary, it was like watching Mike Nolan or Singletary try to be a head coach. Those
Yeah.
guys are great defensive coordinators, but head coach is just not
It's
cut
just a
out.
different ball game, right? Some people
100%.
just aren't cut out for it. So
All right, man. Well, enjoy the weekend. Thank you for taking the time. This is our first one. If you liked it, let us know. If you didn't like it, don't let us know. And yeah, next week I'm gonna try to get an insurance guy. We're gonna talk about California insurance and
Yeah.
changes in place there. So, all right, y'all. Thanks.
Take care.